Okay, hello everyone, and welcome to this intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning, guys. Good to be here. We got a packed room. Well, you guys asked for volatility, and you got it. I hope some of you were able to capitalize on some of those moves yesterday. We'll be going over as many pairs as we can today. I want to leave room, obviously, for your questions on anything that you saw yesterday, any price action, pair, setup that you guys are looking at. Feel free to throw it on the message board. Um, a quick note on what we saw. So, obviously, the tumble of this magnitude, guys, is a sheer panic sell-off. From a scalping standpoint, it makes specifically your stops a little bit more tricky to navigate around. So I tried to prompt you with a little note of caution here yesterday, just on account of these trading conditions. While it's great, it offers a awesome amount of opportunity. Graham saying good morning, quieter day than yesterday for sure. Graham, 100%. Great to see you in the room. But you'd expect to see a little bit of a hangover after such a move. So it makes the aftermath, specifically the day after a move like this, for me personally, a little bit trickier. So I am looking at the euro. I'm still focused on dollar yen. Euro pound, while a little bit more of an expensive pair to trade, does give you pound pips. So while the ATR is kind of tight here, we have seen that blow out from the recent contracting range. So that's continued to offer some clear-cut levels as well. In overnight trade, here's what we saw. Well, before we do, here's relative performance so far on the dollar. So you have the Kiwi and the Aussie each with a gain of 0.7% or more on this session. The whole com block rather, doing well today. European counterparts, not so much. You got the euro down 1%, Swissy down 1.3%. Again, a good barometer of dollar price action rather. And actually, the Swiss franc just came into a major key support yesterday, so we'll take a look at that as well. From the equity side of things, you saw another spill in Shanghai. So the Shanghai index was down another 7.63%. You saw the Nikkei shed 3.9%. It's off session lows, but still with that drawdown. Now, you opened up today in Europe around 6:15. There was a release that China not only is going to lower its triple R, which is obviously the reserve ratio requirement for banks, and cut its interest rates. So on the back of another 7+% loss day, they finally come out with some easing measures here that the markets have been looking for. Is that going to be enough? I don't know. It seems like markets are starting to lose a little bit more. What's the word I'm looking for? They're losing that confidence that the PBOC and that the authorities really are going to be able to curb, events like what we saw. And obviously, the global market has larger implications if we do see a material slowdown in China. The numbers haven't been all that well. They, moved for a historic move on the yuan last week. Now here they are cutting interest rates, reducing the reserve requirements. These are all measures that are made to ease market conditions, meaning that there is a concern domestically within China on mainland that you are seeing a material slowdown in consumer spending or broader consumption in general. If that's the case, yes, this spill off and turnover in broader equity markets could turn over into something much more material. I think a lot of what we saw yesterday was a little bit of a panic. You'd expect to see some snapback. We're seeing that. Let's jump right into the charts. But before we do, real quick, here's what the equity market looks like in Europe so far. So on the back of that announcement to hike or cut interest rates rather and reduce reserve requirements, you did see markets rally pretty strongly. You got the CAC up 4%, DAX up 4%, IBEX 35 up 3.44%, even the FTSE is up 2.7% today on this session. If you look at equity futures, we're also trading higher as well. Dow Jones looks like it's up 520 points, about 6 handles on the S&P. NASDAQ up about 148 points ahead of the open. So broader risk assets, doing all right. All right, you've seen a little bit of a snapback. Obviously, we've had a 3-day massive decline. It's the first time we've seen a 10% or more decline in the confines of just 3 days. So we'll be watching risk assets closely today. All right, let's jump right into the charts. So here's a quick look at the dollar index. I posted this on the radar charts yesterday with the premise of, look, I mean, we could see a material rebound here, and that's exactly what we're seeing. The major key resistance near term, 11,861. We've blown through that. I'm still focused on this median line here. And I also showed you guys on this yesterday the 30-minute chart, which was highlighting that region for a near-term structure off the highs Here's what that looks like at this point. We're just testing that resistance range right now. All right, so near term, we'll be watching this. If it breaks in US trade, you look for a broader recovery. The invalidation level for the short on the euro is still up at 11,902. It's pretty much just above where we opened the week. And that's that key support region that we've been watching, or that we were watching into the close of last week. So the 50% retracement from that, what is that, June advance, as well as this major key pivot here at 11,886, excuse me. That's been a very clear cut pivot in price. Okay, and there's that 11,886 region. Resistance, breakthrough, support, support, breakthrough, resistance, and so forth. So we might have a little bit more of a recovery here for the greenback. We took a pretty big spill, you know, on the back of what we've seen over the last couple of days. This constitutes what, 5-day decline? 4-day decline of a pretty sizable magnitude. So look for resistance right about where we are right now heading into the US Open. If we snap higher, we'll be looking for short triggers more closer to that 11,900 region. So with that in mind, and again, keeping in mind real quick that this whole risk on, risk off thing with stocks up, dollar down has not been in play. In fact, if anything, they've been moving in lockstep as far as the directional bias is concerned, maybe not the magnitude. But, you know, if we see this rally carry over into the open and we do close at, you know, on the positive side of things on risk, you'd expect dollar to give us a little bit more of a move higher before we start to turn over again. Also note that this is the first break in momentum sub 40 that you've seen since this brief dip that we made below May. And if you recall, the rules of RSI that we typically talk about a lot here in the room, guys, you know, in strong uptrends, finding support near 40, in strong downtrends, finding resistance near 60. So as you made the high into the start of the year, into the first quarter, you saw a lot of overbought conditions. It's pretty indicative of pretty strong bull markets. This was your first dip and wander below 40. On the rebound, 60 resistance, 60 resistance, 60 resistance, and here we are below 40. It's a broader shift and a change in behavior from the momentum standpoint. So after a 3-month stretch holding below 60, the break below 40 does keep the broader downside bias in play. And again, our bearish invalidation level still 11,902. Any questions on the dollar index before we move on? A little support trigger in play there. All right, let's jump right into the scalps then. First on deck was the euro dollar. So this was an update for the trade that we've been following, specifically the scalp that we've been following on euro dollar for some time. The stretch went through all the targets that we noted the previous day, so I wanted to give you an update on this. Haven't really been operating too heavily on it. It took a couple of scalps at a quarter leverage, quarter of what I typically trade. So we want to make sure we're being a little bit nimble. But you know, the risk is for a snapback here off of that resistance. Now we're at support to open up the session. So here's what the daily looks like. We were testing that 1532, which was the February high, confluence with the upper median line parallel for that formation off of last month's low, and a break below that would have kept the downside bias in play. The broader bullish invalidation is still down here at 1367. Okay, which point, in fact, I think was the last target that we noted yesterday or the previous night. So I'm looking for long triggers into this region. We noted yesterday again that momentum or price was coming into this resistance confluence as that 70 region was holding resistance and momentum. You'd expect to see some downside. Broader upside structure remains in play. Okay, and the fact that we reacted to this median line in general, guys, gives us a little bit more guidance, gives us a little bit more conviction that we're on the right track as far as identifying the slope the market is, or the gradient the market is traveling along. So you'd look for a little bit more of a pullback, but looking to maintain constructive here on the euro dollar. Nothing's really changed. Again, I know this chart looks pretty messy, guys. I tried to highlight it to give you a little bit more clarity, but just to go through it real quick, this is the structure we've been working with until yesterday's breakout. Just leaving it for guidance there. because also the median line could come in play if we get a steeper correction. But the broader play was this. Okay, Jamie had this on his charts. I was waiting to see if we can get that rally into this region first before adding this, just to keep the charts clean. But here it is. On the close, we closed right there. And in fact, the stretch that we made yesterday, look where we peaked. Former lower median line parallel for this structure, which was in play for over 3 months. And we completed an exact 2618 extension off of the low from July. So a nice confluence region of resistance. You'd expect, like I said, to see some pullback, looking for some support a little bit lower. From the scalp side of things, here's what it looks like on the 30-minute. And then here's what it looked like last night. Oh, well, there it is. So we were holding support right around 1532, which again, if you remember, is that February high. A downside break. Momentum looked pretty bearish here as we continue to fall to the downside. A break below that came in a couple hours into European trade this morning. And here we are spilling right into that confluence support. So this is just a basic trendline support off last week's low. And then this is that confluence region that we were looking at last week, 114.73, 114.65, which represents sorry about the lag here, guys. Okay, which represents a 1618 extension from that low that we made for the year in March. All right, and that's near-term support at this point. Also, you have a sliding parallel within the confines of that structure that we've been following off of that monthly low from July, extending off the highs that you made here on the 29th, also confluencing right into this region. So you're at a major near-term support. This is going to be our bullish invalidation for the immediate bias. So right now, the game plan moving into the US trade session is you're looking for long triggers well above this region. If you get a compelling long trigger break and this thing blows through 50, I'd look to play the long side of the trade. If it breaks below this, you'd look for the weekly low. Okay, and that's another drop into 1367, which is the broader bullish invalidation level. So a tricky play here in Euro, which is why I haven't really gotten any clear conviction positions to play on this one. It looked like a compelling long actually last night as it was going into Asia trade, but with the market selling off like they did, and you didn't really see much of that dollar continuation, I didn't really want to press it. So again, we'll see if this support structure holds. I would expect that you probably get the break into 1367 just on account, again, of a snapback for the larger move that we saw yesterday. Keep in mind, that was another 4-day stretch to the upside in the Euro as well. So I could get some more downside, but broadly speaking, constructive above 1367. Here's what it looks like, by the way, on the 5-minute chart for the Euro. Okay, and you can see a couple things just want to point out. You can see that along the momentum signature, really constructive off the lows that we made from last week. Okay, really constructive, finding support around 60, multiple breaks above 70. Here we are holding 40 support. So if you break to the downside here, 40 gives out on momentum, you look to play it back into the weekly open. The key level is going to be right here at 1328, which is now the 200-day moving average. But that's the game plan moving forward for Euro dollar. Any questions on Euro before we move off? Big day yesterday. Still like the upside, broadly speaking. The immediate focus would be shifted to the downside with a break below support right here. Mark says, yes, 1360s. Problem will be where to place the stop, probably under 112. I mean, if you're looking for the broader upside swing, yeah. Swing-wise, he's saying. Yeah, I wouldn't even probably go that low, to be honest with you. I would probably have it just somewhere in the range of like 1275, 1270, right around this region. So it would necessitate a break of the confluence of the median line and the 200-day moving average, which is typically a big mover. for this pair. Also, don't ignore the fact, Mark, that we broke that trend line dating all the way back to the highs from May, right? So you'd expect to see that offer some support as well. Median line confluence at 200 days probably where I'd have my stop just below. I don't know if I'd want to risk a full 160 pips on that move. He says, "Oh, the 200-day, good point. Yeah, don't forget about that." And not only that, we noted this yesterday in the webinar on Daily FX. That's the first time we've seen this thing touch the 200-day moving average since July of last year. So it's been a year essentially. And while I'm not really big on trading moving averages, has actually been a pretty decent pivot in price specifically for the euro. So something to take note of there. But good game plan. Good game plan. We'll see if we get this break near term heading into the U.S. Open. That's the first thing, first step. We see that downside move, look to play the shorts, selling rallies while below this 1470 threshold, looking for that 1360, 1330. All right. Any questions on euro before we move off? Okay, so next up on tap was the dollar yen. Also another big move yesterday. This thing killed me because I just couldn't find entry once it finally started to move. It kind of ran pretty fast, so I didn't get a chance to actually jump into a short on dollar yen yesterday. But here's what it looks like on the daily. Conviction in our levels and conviction in our analysis is everything, guys. I just wanted to highlight again, patience pays. We started following this on the intraday side of things ever since the pullback here on the outside day reversal that we made at the highs for the month, came back into that major critical support. Look what's been happening since this thing broke that support, right? After a hold in momentum at 60 for the second consecutive month, the breakdown was pretty apparent. So the major key target was this 121.54, 121.84 level. Obviously, we closed the week right there. Yesterday's charge taking us through all the downside targets. I mean, there's really nothing left beyond that to the downside until you look at like 113. 115 also, 80 being obviously the yearly low. So a couple things to say on dollar yen. I think that this is just like the euro, but the inverse in that I do still like the broader downside while below 120.70. 120.70 at this point is defined by the 200-day moving average. It's the low day close for July. And just above that, you also have the median line off the highs. And while we don't have so much conviction that this median line is necessarily in play at this point, we're going to continue to work with it as the premise. When you see price action like this, panic sell-offs, I hate stressing where the actual low was. But in both the euro dollar and the dollar yen, the cleanest of the two that really spiked yesterday. So sterling key, even Aussie key, those spikes have sort of altered the near-term picture a little bit. It's fallen out of favor with me. But on the euro and the dollar yen, even those massive emotional spikes came into major regions of respective support and resistance and held. On this one, it was the 1618. On the euro dollar, remember, it's a 2618. On the dollar yen, it was the 1618 extension from the decline off the yearly high. And that came in line with a sliding parallel extending off the lows from August. So this is just a basic trend line, guys, extending off the lows. Again, this is all the way the low that we made in 2012, 2014 lows. And if you just mirror that to these lows, you can see that that came in right in line with where we sort of rebounded yesterday. So you're testing near-term resistance now, 1982, 1990. I'd expect you probably see another breakthrough. Keep in mind, this is the yearly open. So if we close above this, probably looking at another rally into 120.70. Here's what it looks like on the intraday. And here's what we noted last night. Okay, so we said expect some upside swing after this run with interim resistance at 119.86.88. That's what we're testing right now. It looks like we're sitting just above it. And this is sort of where we'd start to want to look for short triggers. This is going to be our near-term bearish invalidation. I don't want to keep it too high up on dollar yen just because I know dollar yen snapbacks are notorious. and I don't want to get caught on this side. So the rally that you had into the end of May, we covered the entire rally the next day in June. That massive down day that we had in June covered almost the entire thing the following day. So I want to kind of leave a little bit more room. So the bearish invalidation level, we're just going to keep it right at that 120.83 level, which is the April highs. That coincides with the median line off the high. And if we break above that, I'll look for that rally towards 120.60, 120.83, which is also 83. Oh, is the December high. So looking for a rally in dollar yen to get back on the short side. We'll see if the momentum signature holds below 60. That would be a great tell as well. Immediate biases to the upside, or the immediate risk is to the upside. We'll be looking to sell that rally. Mark says, in hindsight, so many good setups we followed for weeks, but not really followed up on the plan. Always 2020 in hindsight, right? Yeah, Mark, and that was something me and Jamie were just actually laughing about yesterday. We've been talking about this dollar turnover. It seems like months, but timing is everything. And just as we were all on Twitter saying, "Wow, this market is super boring," even who was that? Raj was on Twitter saying, I have zero confidence right now in what's happening in the market. All that meandering around, range holding, and all this is a recipe for an explosive move. Not to this magnitude, to be fair, no one really saw it to this magnitude really stretching, but like we said on the day before the break, I said it, Jamie said it in his webinar, times of really low volatility typically precede times of very high volatility. And that's exactly what we saw. And Mark following up saying, yes, lulled into complacency. Exactly. Got to recognize when the opportunities are there. The market is starting to move. And as such, we're all over it. Shoulda, woulda, coulda, Mark. We're right back in it. Markets are going to pick up. We're heading in September. It's only going to get better from here. So really excited on some of these moves to finally see some volatility here. The China story is going to be front and center until we get some clarity. There's a lot of talks that they're going to have to do even more to ease conditions. As like I said, confidence was really, really low. In fact, yesterday I was doing a lecture for a group of China investors that we do here, or they do at FXCM, and I was speaking to them about what was going on in China since they're on mainland. And they were saying that there's a lot of, the biggest thing is not necessarily fear or panic, it's just disappointment in what the authorities are doing. So this type of sentiment, if it spreads, can really lead to a lot of public unrest. And if that starts to really mount, well, then you're talking about a whole different group of problems for China. So again, I'm not a conspiracy theorist. I don't want to stress that. We're here to trade that, not the story behind it. And hopefully it'll just continue to offer some more volatility. So any other questions on dollar yen before we move off? Quite a move. Quite a move. Okay. Last but not least from last night's update was the euro pound. Now, for those of you who know me for a couple of years, this is typically the trade I've traded least in my career. I look for wide range ATRs or wider than 70 pips, so it is a little bit more of a tighter play. But as I said earlier, they are pound pips, so keep that in mind. Here's what euro pound looks like today. So the game plan here was very similar to euro dollar in that, look, we came into a major resistance confluence. Unlike euro dollar, which is actually closed above the 200-day moving average and make tested as support, euro pound couldn't. Okay, euro pound couldn't. So also euro dollar came into 70 in reverse course and momentum. This couldn't even make it that far either. So the risk, even more so for euro dollar, was here on euro pound, just because of the way and the reaction, the behavior of price around this key threshold. So again, this is the upper median line parallel extending off the lows for the year. This is another upper median line parallel extending off the lows from June and July. And you can see the 200-day moving average is right in there. We closed just below it. So we're now coming into that key support zone, and this is kind of where we'd want to look to see some support if the top side objective, the top side, bias is to remain intact. You have the lower median or the median line right off the lows. You have these orange slope lines, which we've been following for quite some time, a little over a year, I think, over 2 years almost. It was July of 2013. And that's been tested multiple times and has been a key support. We just broke through it yesterday, should offer some support now. Okay, the 50% retracement of just the stretch off of this last swing takes you as low as 72.25. So this is sort of the near-term major key support level and bullish invalidation level you'd expect to see for Euro Pound. The scalp is just testing near-term invalidation at this point. So a break below this confirms the downside bias. You're looking at targets at 72.22. 71.80, and again, 72.22, excuse me, is the last target that you'd want to see, or the target that you'd want to see hold as a little bit more of a key support. The same slope lines you can see here on the 30-minute. Let me just stretch this out. So another pair where the divergence is going to be very interesting to see price action in the pound, I think will be a little bit more critical for this than the euro at this point. So the pound dollar, while it did push through 157, couldn't really kind of stalled out just below that May high day close. Momentum, I just was looking at this yesterday. So a nice trigger that offered a really nice break in price that took us right into the monthly lows for July. Offered some resistance on the rally, sub 157. Here we are again testing it as resistance. So this is your major key resistance zone, is a little bit wider of a region, but you are looking at the yearly highs. So we'll keep that focus in play. That's 58.80 essentially into like 59.40. And where we pulled off of today was a perfect rebound off the median line. So if pound continues to rally, euro gives you a little bit more downside. That's a recipe for a spill into that target on euro pound. So that's sort of the game plan we'll be looking for heading into the US session here today. But, another pair where the divergence in monetary policy might be set aside for a little bit as the pair rallies. Nothing's changed. Europe is still expected to, maintain a very accommodative approach. We've long discussed here in the webinars that the BOE is probably on pace right alongside the Fed there to, well, even more so at this point after this spill, to possibly move on rates. As such, the fundamental broader picture isn't necessarily driving this right now, as is apparent by yesterday's rally. So keep that in mind. How to tell what pips a pair are in for the euro pound? You said pips are pound pips, right? It's always going to be the second in the pair, right? Just like when you're trading euro dollar, the pips are in dollars. When you're trading dollar yen, the pips are in yen, so forth. Eileen says, got it, right on. Mark says, dollar CAD, please. Okay, cool. Any other questions on the euro pound? Again, I know that it's a tight scalp, guys, but if you get a good entry on it, you're still looking about 20 pips per scalp. It's not too far off. And again, this is to be used as a reference. I do want to just mention that on trades like yesterday, where you're in a scalp and the market just starts running 60 pips, it's pointless just to close it out right off the bat because you've achieved the target. If the market has momentum on it and if it's trading off of something emotional, or there's a massive influx of a move across the board, it's not just localized in dollar yen or dollar CAD, but stocks are ripping. Or stops are selling off. You're seeing treasuries move higher, yields move lower. If the move is across the board like that, open up your ranges a little bit. Bring it into 33% of the daily ATR if you have to. But you want to ride those winners as long as you can. I'm a big fan of fading out of the position, not fading in. So as the market starts to run, there's nothing wrong with taking a little bit off the table every time you reach one of the objectives. Bring your stops down to break even or better and see how long you can ride that wave. Those have typically been my best performing trades. All right. All right. Let's move into your questions. Feel free to throw them on the message board. Any pairs that you guys are looking at or would like to review. Mark wants to take a look at dollar CAD. Mark, what are you looking at with this, man? I'm really torn on dollar CAD, because even on a day like yesterday, this thing, wasn't really moving with the flock. It's just doing its own thing. We're at fresh new yearly highs. We reversed back. The pivot that we were working on as far as the lower median line parallel for this formation hasn't really been all that instrumental. Intraday, it does look a little bit cleaner. I'll show you that, but pullback to go high in September. Yeah, I mean, we've been trying to play the pullback, right? And the whole premise of the trade that we were looking at over the last few weeks was a break of the monthly opening range. Here's the break, and now we're testing the monthly opening range support. So, I don't really have a game plan here necessarily, Mark. If anything, you're still constructive above that high day close or the previous high day close. Here's what it looks like on the near term. Let me take another broader look at this. So the only thing that looked pretty compelling all day yesterday, and I just didn't have the courage to pull the trigger, was the divergence that you saw into the highs. I mean, it kept on going. Higher high, lower high in momentum. Again, wouldn't necessarily look at this wick, but all those series of high were lower high, lower high, lower high, lower high. Then on this last stretch, 60 hold in resistance. That's bearish. 60 hold in resistance. That's bearish. Here's the 40 break, right? You'd expect to see some more downside. And there were two separate occasions since the weekly open where it looked like it was breaking the weekly open, and we pulled right back. So, yeah, Mark, if you put a gun to my head, I'd have to be with you in that I would want to see a pullback to get on the long side. Am I willing to play the pullbacks at this point? I don't think we've gotten the broader turnaround here on the daily to confirm that. You're kind of trying to fight an uphill battle here on dollar CAD. So it's funny because when we were trading this, guys, last week, and we did get a couple of decent short scalps off it, when it broke to the upside, there was a lot of Twitter talk about, hey, do we look to sell here? Hey, do we look to sell here? We don't want to be engaging in that behavior, okay? Because when the market's breaking out, we don't want to try to fight it, especially from a scalp side. It's different if you're coming to a major key resistance and you're mid-session, you're seeing the close of Europe, great. Sometimes you can play a little scalp on the pullback, but broadly speaking, I need a little bit more conviction on the turnaround here before getting involved with dollar CAD. Mark, does that help? Does that offer some clarity on it? Yeah, I guess at this point, the first thing you'd want to look at is just a basic retracement off the low. The next objective target, by the way, if we do break through the highs, is all the way up here near 33.50, but just to give this some color. This is sort of where we'd need to clear below. He says, yes, exclamation point. That is what I'm looking at, those fibs. Yeah, I mean, yeah, 3120, 31 region. Remember, this is the Fibonacci retracement. Oh, it's a 236. Yeah, I mean, that's ideal scenario. I would agree with you. That would be the ideal scenario. It's just whether you get the pullback here. Remember, as the dollar was losing some steam against most of its counterparts, dollar CAD was actually rallying. It was weird. It was weird. Keep in mind also what's been going on with crude. So if crude finally finds some sort of meaningful low in a rebound, I guess I'd get a little bit more comfortable about even trying to play possibly on the short side of this from the scalping standpoint to get back long later on. But we haven't really seen that recoup. I mean, we've seen a rebound today. Here's what crude looks like. And it's funny because I came in and one of the first things I saw, dollar trying to make a rip. First thing I saw was, crude up sharply, but still sub 40. So I don't know how sharp they think this is, but if you finally see a little bit more of a meaningful recovery, specifically momentum gets back above 30, I'd look for that material pullback in dollar CAD. Other than that, I'm a little Little skittish on the CAD crosses. Andrew says, can you help pinpoint support zone on Sterling Oz? Sure can. Here's what Sterling Oz looks like. So I think I might have tweeted this chart yesterday on MB4X. Sort of the first levels I would be looking at. What is this region here? Okay, so there's that pivot around 28.20. Oh, excuse me. Way off target. Okay, I have a soft target at this as far as Sterling Oz is concerned. A soft target of support near 2160. Excuse me, 216.90, 216.89. Major key support on this, though, Andrew, doesn't come till down here. Doesn't come till like down here near 215.80. You're basically looking at last month's high. You're looking at the monthly opening range high. You're looking at a sliding parallel. This is a long dated slope, multi-year. And also the origin of the breakout. So there's sort of a good amount stacked up there at 215.50, 215.45. Major key resistance, and an interesting level of which we reversed at. We overshot it a little bit. 222.18 actually represents a long-dated 618 retracement. Let me drag this back for you. Off the highs from 2008. So from the crisis highs. That's the 618 retracement. Also, even in near-term price action, this consolidation range that we started as far as the last 2 weeks of July, the first 3 weeks of August, okay, that range, if you take a fib retracement of that, 100%, takes you right into 221.76. So again, we overshot that a little bit. You had trendline resistance or channel resistance up there as well. We closed well off that level. So I look for initial support near 21. Excuse me, I keep saying 21. 216.90, 217. Major key support around 215.50. Andrew, does that help? Here's what it looks like on the intraday. I don't think I have anything compelling on this. Again, noting that strong divergence into the highs, waning momentum. Yeah, it's interesting because we actually liked Sterling Kiwi better last week. I think you're starting to get a little bit more clarity on Sterling Oz at this point. Might be a little bit better. Andrew says, thank you, more than welcome. Mark says, the US Open will probably bring some clarity. Yeah, for sure. It always does on these near-term setups, for sure. With the wildness right now, what do you think for month-end behavior? Similar to other month ends? Yeah, so I'll start to really lighten the load as we head into Thursday, Eileen. I probably won't be doing anything on Friday or Monday specifically, probably not Monday, but with the end of the month coming on a Monday, that's same thing, Eileen, no change. You just become a little bit more cautious, that's all. Eileen says, okay, sounds right. Remember, a lot of people have already been readjusting portfolios and everything at the end or over the last couple of days, specifically what's been going on with all this massive sell-off. So you might not see that be such a prominent feature into the end of the month, specifically this month. Eileen says, that's what I was thinking. Yeah. Again, it sounds like something we necessarily prepare for, Eileen. It's just something to be mindful of. So we'll keep that in mind. Any other pairs that you guys would like to look at? Feel free to post them on the message board before we wrap things up. But here's a quick look again. Dollar. We'll be watching to see if we can clear this into the open. Momentum is testing 60 as well. Quick look at the German 30. Bernard, I don't know if you're in the room, but you were asking about this yesterday. You see it right there. So we broke, right? We broke that support confluence, which came in somewhere in the range. What level is that? Oh, this was the extension. I'm sorry. Or the retracement off the lows. That was 110.50. And the confluence of the lower median line parallel. So we broke below that, completed a 2618. This is a longer stretching lower median line parallel. And here we are breaking through as resistance. If we close back above this, you'd expect the recovery in the DAX actually to carry on a little bit more. So I don't know if you're still holding that short, but I just wanted to give you a little bit of a cautionary note there. As this thing breaks this region, if we close above it, the risk is for a little bit more of a substantiated rally to possibly test that median line off the highs. That being said, your critical support structure is still going to be down here in this highlighted region that we noted yesterday. I was long with 600 pips win, Bernard. Well done, man. Killing it these days. Okay, Eileen says, I wanted to find out how you get multiple views. Yeah, you got it, Eileen, right? Several 5-minute charts on one page. When I click and drag, the charts just open to another page with the tabs. So if you have a tab like this, just take the tab, pull it off, and then you'll see this little triangle come up. You can drop it wherever you want. Pull a tab off, you'll see another triangle come up or another square come up, a diamond that tells you can put in each quadrant. All right, hope that helps, Eileen. Mark liked that little trick too. Yeah, guys, I think there's a release actually coming out for Market Scope in a couple of weeks. It's going to have some cool features that we've been working with the developers on over at FXCM. So definitely prompt you to that. A quick note on gold. Another one that we've been just kind of keeping a very close eye on. The weekly chart, obviously we noted the upper median line parallel that dates back to the highs they made for 2014, extending also off the 2015 high. You did probe through this major support zone, resistance. You closed just a couple of dollars above it. We went for a tag of the median line, and now we're testing it as support. So if we get out the underbelly of this 1145 region, I do think you're at risk for a larger pullback in gold. That was sort of the make or break level for gold. And here we are turning over just ahead of that region. Near-term support and bearish invalidation, or bullish invalidation, excuse me, takes you into 1130. That's the 618 extension off the high, but more importantly, just basic trendline support off the monthly low. Also, if this is going to be the opening range high for the month, just as the opening range has been offering some clarity here, especially throughout the course of this year, then you'd expect to find some support right around that region. So possibly some more downside for the gold trade, possibly more upside for the dollar trade, all to be reversed or to offer some better positioning heading into the end of the week, start of next month. All right, well, if there are no other questions there, will you be looking for short triggers ML on sterling yen? I have a zone. Andrew Smith. Yeah, sterling yen is really popular these days, right? You guys are loving it. Here's what I have to say on sterling yen. Again, yeah, I haven't really updated this chart, to be quite frank with you, Andrew, but I think you're looking at the right area. So Andrew says, will you be looking for short triggers at the ML on sterling yen? I have a zone of 190.55/75. So I like the region of which you'd be looking at. You got a swing low right there, a little bit higher than where you're looking. That coincides with the median line or just above. And at this point, and again, I don't really like stressing these retracements because I don't like stressing the lows that are made on days like yesterday, but a quick look. Hmm. Oops. So this is sort of the zone of resistance I'd be looking for. A little bit higher than where you're looking, but basically the same region, 90.65 into 90.95. That swing low from July, but also 618 of the rally. And yeah, the median line is right there, basically today. So if you get a stretch into that region, I would be looking at it. I do want to just bring into note that this 89.70 region is actually the December high, which was the high for the year for 2014. So it's not just another level, and we've seen some pretty decent pivot action on there, especially if you bring this into like a close. All the pivots around it have either been reversals, or clean breakthroughs. So we kind of tested that earlier today. We'll have to see where the close looks like. But yeah, I would be looking for shorts somewhere up into that region. Yeah. Again, momentum, change of behavior, overbought, sub 40, 60 hold, back sub 40. Don't really have a very compelling trigger, but the behavior of the momentum signature definitely looking a little speculative here for a little bit more of a spill lower. Mark Haverman says, I'm in the long camp right now. So, Mark, what's your target on this? You should be looking for a stretch into that 89.70 region, secondary target 90.65, 90.99, 91 basically. But I really wouldn't be looking for a much stronger stretch beyond that to the upside. Again, the yen short is a story I think you need to be speculative right now, because it might continue to catch a bid for Haven, and also the BOJ is kind of softening the approach. You had some comments come out overnight from the finance ministry saying that the move was abrupt in the yen, and they were blaming some of the yen weakness on that. But come on, the move was abrupt across the board. It wasn't just the yen crosses. So he says not really. Higher highs. What do you mean by that, Mark? What's you're looking for a breakout above 196. Okay, so he's looking for a much higher high. Sterling yen is my trade of the year. So Mark, you're on the same page. I'm on the same page with you longer term. Near term, though, I do think you could see this give us a wave lower for what it's worth. If that 190.65 level holds, I do think if this thing could spill right back into that 183 region even. So the swings are getting much bigger. The ATR is blowing out. From a scalping perspective, just use some caution on it, but possibly what's in play here. All right. Mark says, I know. All right, guys. So we'll wrap it up there. The onset of the U.S. market is on in just 10 minutes, so keep your eyes peeled for that. We will keep you updated later today with another update on intraday or the intraday post later tonight. Again, we'll be back on tomorrow at 8:30 Eastern. As far as the data is concerned, you do have some data prints coming out later today at 10 o'clock. New home sales is going to be the major print. And then keep in mind for the Kiwi crosses, you do have trade balance data expected to show a much larger deficit than what we saw last month of negative 600 million. over in New Zealand. So the Kiwi crosses will be of interest there. Heading into US tomorrow, as we open up the session, we'll be getting MBA mortgage applications, but during the open of our webinar, durable goods orders, and that's typically a major print as well. We're supposed to see a contraction there. So if we do get a worse print than that, could propagate some further pressing of those dollar shorts. We'll see you tomorrow morning. Best of luck trading. Cheers, guys.